Happy Eid al-Fitr to our Muslim viewers and happy holiday to all Nigerians. Welcome to the Thursday episode of Business Incorporated. I'm Ini John Mekwa. Well, Egypt is to expand Suez Canal by 40 kilometers. And Zimbabwe adjusts cannabis investment policy. The Democratic Republic of Congo loses almost $2 billion in sale of assets. And just before we get to those stories, let's see intraday market numbers, which were mostly negative on the African continent. For the markets that traded, Nigeria and Egypt are closed. However, South Africa traded and at intraday shaved 2.84% of the JSE, while Kenya SE lost 0.92%. In the Middle East, well, mixed sentiments before the market closed for the holiday. Dubai's index added 0.36%, while Saudi Arabia was up by almost 1%. On the flip side, we have Qatari index losing the most by 0.23%, followed by Abu Dhabi, which decreased by 0.14%. And European stocks retreated today as markets around the world and the U.S. Labor Department reported that prices American consumers pay for goods and services accelerated at their fastest pace since 2008 in April. Meanwhile, earnings in Europe came from Burberry, BT Group, and Telefonica. Well, Chelsea is in Frankfurt and tells us more about this. Hello, Chelsea. Welcome to the show. European stocks stumbled again on Thursday after a brief stabilization. Did yesterday's U.S. inflation data change investors' minds about the threat of higher prices?
I think yesterday's inflation data was really crucial in how investors around the world are thinking about the threat of higher prices in the months ahead and what that means for monetary policy for central banks around the world. Yesterday's data was a shock. People really didn't expect to see inflation rising that quickly. If you look at the month-to-month increase, that was actually the highest since 1981. So this is a bit of a historic increase in prices that we're seeing. There's a lot of discussion today among economists, among investors about how worried they should be about this. Some of these price increases are temporary. It's things like airline fares recovering because people can travel again in the United States. But other parts of it do seem more worrying, like food prices, for example, are rising quite quickly. So I think a lot of people are starting to take the threat of inflation much more seriously in the U.S., but anything the Federal Reserve does, if it has to raise interest rates, if it has to pull back its monetary policy, that will have major ripple effects for every market in the world.
Meanwhile, a new report showed that German companies earned more in the first quarter than ever before. What drove these record profits?
Well, this is a report that looked at the financial results from the first quarter of the companies in the DAX 30 index, so the 30 largest public companies in Germany. What this showed is that companies are benefiting very much from the recovery in Asia, and this is a theme we've been talking about as these earnings have come out. But it's a trend that has been very strong, and it was really being shared by a lot of Germany's largest companies because many of them are very dependent on exports to China and other Asian markets. So this report from EY showed that Asian revenue for these 30 companies was up by about 30% in the first quarter. That also helped to drive profits up by almost 100%. So profits almost doubled in the first quarter, which is pretty incredible if you think about the fact that much of Europe, so much of the home market for these companies was still facing a third wave of infections, was still under a very strict coronavirus onerous restrictions. At the same time, the analysts behind this report today are warning about getting too optimistic, because they say there still are a lot of risks, including, of course, the pandemic, but also some of these issues we've seen with supply chains, with shortages of certain products like semiconductors, and also the rising inflation that could eat into profits for some of these companies as well.
And Elon Musk has been in the news since yesterday after he said that the car maker will no longer accept cryptocurrency for car purchases. What does this mean for the future of Bitcoin?
It's a big blow for Bitcoin, and we've seen prices fall quite dramatically. They were down at one point around 20%. Now it's down maybe 10 to 12%, but that's still quite a large fall for the cryptocurrency. I think one of the reasons why this is hitting the market so hard is that Elon Musk has been such an influential voice in popularizing Bitcoin, particularly because Tesla was one of the first large corporations to say, okay, we're going to start accepting Bitcoin as a payment. But now that they are having to confront these sustainability concerns, particularly as a company that's really billed itself as sustainable and green in terms of electric vehicles, that's something that would likely have an impact on other companies who have warmed up to accepting cryptocurrencies like PayPal or eBay in the wake of that decision. So there's still a lot of discussion over exactly how harmful Bitcoin is for the environment. But it's clear that it does use a lot of energy. Some of that is likely coming from fossil fuels. And for any company that has moved to accept Bitcoin, they likely are going to face more and more pressure from both their customers and their investors because of this sustainability concerns that are becoming so prevalent in the market.
Yeah, and obviously not a very good time for investors in Bitcoin also. Well, thank you so much, Chelsea, for sharing this time with us on the show. Well, we'll move over now to London. The FTSE 100, the FTSE 250, and the all share all down at midday. We have Juliana joining us from our London studio. Hello, Juliana. Good afternoon.
Good afternoon, Ine.
Yeah, well, the UK government bond yields is highest since 2020, dash for cash, but the FTSEs are all down. What's going on?
Just as you were discussing with Chelsea and Frankfurt, it's all about the inflation. As you said, 10-year gilts have risen, I believe, to about 2%. Also, 20-year gilts have risen to their highest that they were since before the pandemic took hold in the West last year in 2020. This is a massive issue. Of course, it's all about what's happening in America. I think lots of investors and economists had predicted April's consumer price index to be about 3.6%. To be over 4% is a massive worry, especially because just a couple of days before, we also got a pretty high year-on-year CPI data from China. Within the UK, there has been lots of discussion, particularly Andy Haldane. He is leaving the Bank of England in a couple of weeks, but he was saying early this morning that the Bank of England pretty much have to act now if they don't want to see CPI rise too high. At the moment, here in the UK, it's about 0.9%, way below the 2% target, but we know the economy hasn't opened fully. Once it does, and you start getting those bottlenecks, which we're already seeing from Brexit, and of course, it didn't help with the Evergreen ship being stranded in Egypt a couple of months ago. This is going to begin to trickle down. I did hear Chelsea speak about airlines. We're also seeing that with Portugal, from Britain. A lot of people trying to fly to some of these countries that are on the green list. We are seeing prices rise then. And we know that there's billions of pounds stashed up in savings that people are desperate to spend. So there's lots of concerns, not just globally, but nationally within the British Isles, which is why we are seeing triple-digit losses on the FTSE at intraday. The FTSE all-share is down 2.27%. The FTSE 100 is down by 2.07%. And the FTSE 250 is down by 1.30%. In the currencies market, the British pound also down on the US dollar by 0.34%, down on the euro by 0.23%, and down on the Japanese yen by 0.36%. Down, 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 down is the terminology in the square mile today.
Unfortunately so. Well, Britain's telecom giant BT is following up on its £12 billion pledge and creating up to 7,000 jobs. How impactful would this be in its quest to address UK's status as a global laggard in full fibre broadband?
Yeah, good story. Good story for the British government. Definitely part of Boris Johnson and the One Tory Nation pledge to level up the country. If you don't live, well, even for some people that live in London, still struggle to get decent broadband. We've obviously had that spat with Huawei, which means we're going to get a delay in getting 5G networks. And BT is the biggest telecommunications operator here in the UK. They did release their full trade update this morning, showing that revenue and pre-tax profits are down between 7%, revenue down 7%, pre-tax profits are down 23% on the year. As soon as they made that announcement, their shares dropped about 5%. Nobody really is up today on the FTSE 100, but they're one of the biggest blue chip fallers. Once they made that announcement, they also used the opportunity to say that they are going to be pushing ahead. They're going to be accelerating their full fibre broadband. Openreach, which is a subsidiary underneath British Telecom, they say that they are able now to reach about 4 million homes within the next couple of years. This is going to create more jobs. Yeah, this is an absolutely amazing story. BT have been under scrutiny recently purely because of the monopoly they have on the telecommunications sector. And when they do have that monopoly, people expect them to do more. So they're hoping that this announcement will prove their critics wrong. But it doesn't feel like it was enough because their shares were down 5%.
Well, let's talk a little bit about football. Premier League has announced the new £4.8 billion TV rights deal with its existing partners Sky, BT and Amazon, avoiding an auction that could have led to hundreds of millions being wiped off the value of the next deal. What reactions are you getting concerning this?
Not much, to be honest. Not really a big story here because it's a rollover. So basically exactly the same terms we had before, we have now. It's still a football monopoly. Talking about football, my favourite subject, not. But no, basically Amazon, BBC, Sky, the owner of Sky News, they are going to be able to retain the rights that they previously had, costing billions of pounds. We know really this is where all the revenue comes from in football, particularly over the past year or so, where fans haven't been able to get into the stadium. But if you want a big football story, it's got to be about the Champions League, right? That was in Turkey, now been moved to Portugal. You've still got lots of fans saying that because it's two British teams, it should be here in England. That's the main topic. But yes, there's been a rollover of these distribution rights. All right. Thank you so much, Juliana. Enjoy the rest of your day. Well, we'll move now to Asia, where major Asia-Pacific stocks market slumped today as Wall Street fell sharply with inflation data, triggering fears of a rate hike. In Japan, the Nikkei 225 plummeted 2.49% to close at 27,448.01, while the topics fell 1.54% to 1,849.04. Mainland Chinese markets also tumbled. The Shanghai Composite dropped 0.96% to close at 3,429.54, and the Shenzhen Component slipped about 1% to 13,917.65. Hong Kong's Hang Seng Index fell 1.64% during afternoon trading. Australia's S&P AX 200 fell 0.88% to close at 6,982.70 as major banking stocks traded mixed. Over in South Asia, the Kospi dipped 1.25% to 3,122.11. MCS Broadex Index of Asia-Pacific shares outside Japan lost 1.34% in the afternoon today. In the U.S., futures contracts tied to the major U.S. stocks indexes were set to add to Wednesday's steep losses, but have started to rebound. Nasdaq futures jumped 0.5%, turning higher as investors stepped in to buy more top stocks under fire all week. S&P 500 futures rallied back to the flat line. Futures on the Dow Jones Industrial Average were still off by about 100 points following its worst day since January. Key tech stocks rebounded in pre-market trading following early morning losses. Facebook, Apple, Amazon, Netflix, and Alphabet turned higher in pre-market trading and were each up about 1%. Even Tesla reversed course, trading higher by 1%. The Dow fell 681 points to notch its single worst session since January. The S&P 500 lost 2.1%, its biggest one-day drop since February, while the tech-heavy Nasdaq Composite slid 2.6%.
Traders across the board cited a rise in interest rates triggered by a hotter than expected inflation report for the midweek slump. In the oil market, prices fell today, pulling back from an 8-week high as concerns about the coronavirus crisis in India, the world's third biggest importer of crude, tempered a rally driven by IEA and OPEC predictions that demand is coming back strong. Brent crude was down 0.5% at $69 a barrel. West Texas Intermediate was down 0.5% to $65.77 a barrel, having risen 1.2% in the previous session. Oil demand is already outstripping supply, and the shortfall is expected to grow further, even if Iran boosts exports. Colonial, which pipes more than 2.5 million barrels per day, said it is hoping to get a large portion of its network operating by the end of the week. We'll take a break now. When we come back, we have more stories for you on Business Incorporated. Stay with us. You're welcome back. Well, on Tuesday, United Nations launched the World Economic Situation and Prospect Mid-2021 report, showing that the UN expects a 5.4% expansion in global economic growth this year due to rapid vaccination rollout in a few large countries. To further expatiate on this, Ms. Helena Afonso, Economic Affairs Officer at the United Nations Department of Economic and Social Affairs, joins us from Lisbon, Portugal. Thank you so much for joining us, Ms. Afonso.
Thank you for having me.
So the 5.4% expansion is hinged on rapid vaccination and continued fiscal and monetary support measures. China and the United States, the two largest economies. What impacts does the spike in the cases of COVID-19 in India, being the third largest market consumer, have on this projection?
The situation in India is truly heartbreaking. Its economy represents only about 3% of global output, so the situation there does affect the global forecasts, but only to some extent. The uptick in global growth we're predicting is coming mostly from the largest economies, that's the US and China. But the key issue is that the situation in India can become even worse if stronger vaccine-resistant variants were to emerge. And this could alter the trajectory of the pandemic globally in a worse direction. For example, it could trigger a domino effect of other large emerging economies not having the pandemic under control. And this would then increase uncertainty and it would make economic activity tumble. It would be dramatic since we're already seeing the developing regions lagging behind, some of them with high debt, and the debt problems could get worse if they enter into a spiral of low growth and rising debt. So from a health perspective, the rise in COVID cases in India poses a real risk to the global economic outlook. And it just shows how critical it is to have timely universal vaccination across the world, and how none of us is safe until all of us are safe, as the Secretary General has said.
So Nigeria's growth is expected to remain subdued at 1.8% this year, linked to high inflation, unemployment, and slow vaccination. What action can buffer some of this and actually trigger it into the positive?
The Nigerian economy has experienced the second recession in 4 years. And unfortunately, the macroeconomic situation is more challenging now than it was when oil prices fell, because it has fewer buffers and policy instruments now to cushion against this economic shock. For example, compared to the last recession in 2016, it entered this recession with lower growth, inflation in the double digits, higher fiscal deficit, falling per capita income. So the economy is expected to have a weak and gradual recovery, with economic output only reaching pre-pandemic levels next year. And this hinges on how the pandemic progresses in Nigeria. Looking more to the medium term, we expect subdued global recovery and lower oil prices, and this will restrict oil activity, fiscal revenue, export earnings. Also with non-oil growth, there is some regulatory uncertainty and some policy uncertainty that limits it. So in terms of actions, the priority right now remains in keeping the pandemic under control, getting people tested, vaccinated, and treated, making sure emergency spending is going to its intended use, and just getting back to normal economic activity. Then, among key issues more for the medium term, is certainly creating more fiscal space, that is raising more government revenues to be used in critical social infrastructure spending, and to cushion against the next economic downturn. It's important also to diversify economic activity. Oil and gas exports, they are 90% of Nigeria's exports for decades now. And industrialization that is oriented for exports can really boost GDP. We've seen this in many Asian economies. And it would lower unemployment by creating jobs, which would be very important for young people that are joining in millions the labor market each year.
All right, thank you so much, Ms. Afonso, for joining us and sharing your thoughts with us on that report. Enjoy the rest of your day. Well, moving on now, Egypt's president has approved the expansion of the Suez Canal in response to a ship getting stuck in the strategic waterway earlier this year. The Suez Canal Authority plans to widen and deepen 40 kilometers of the canal, including the part where the Ever Given got stuck in March. The project will include widening the canal by 40 meters between the city of Suez, where the canal meets the Red Sea, and the Great Bitter Lake north of there. That area will also be deepened by about 20 to 22 meters. And in Zimbabwe now, Zimbabwe has abolished a rule which requires co-ownership between governments and private investors in the cultivation of cannabis for medical use in its effort to encourage what the country sees as becoming the biggest cash crop. This means that investors can own 100% of their investments and locate their facilities anywhere in the country. Zimbabwe sees export earnings from cannabis outstripping those of tobacco this year, with sales expected to reach $1.25 billion. And the Democratic Republic of Congo, the world's largest source of cobalt and Africa's biggest copper producer, lost out on nearly $2 billion in revenue by selling mining and oil assets to Israeli billionaire Dan Gutler. This, according to a coalition of Congolese and international organizations that urged the government to review the deals. Companies owned by Gutler, who is under U.S. sanctions for alleged corruption in Congo, stand to gain a further $1.6 billion in the next 20 years. In response, a spokesman for the company accused the coalition of simply making up numbers in an effort to generate the media interest on which their funding relies. The Congolese coalition's report builds on calculations published in 2013 at the late United Nations Secretary General Kofi Annan's Africa Progress Panel, which alleged that Congo lost out $1.36 billion through the underpricing of mining assets brought by companies linked to Gutler. And the World Bank has signed $500 million infrastructure project with Democratic Republic of Congo to improve roads, mitigate flood risk, fight erosion, and develop public spaces across the capital, Kinshasa. Funding for the project would include a credit and grant of $250 million each. The project is intended to help change the daily lives of the people through investment that it will make throughout the city. And that's the much we can take on the program today. Thank you so much for watching. I'm Ini John Mekwa.